There you go.
Thanks. Good morning, everybody. Thank you for signing on. As you all know, we have a guest this morning going to talk a little bit about personal real estate corporations, some potential financial planning, some of the benefits, and some of the challenges that may come along with it. So, with that, before we get started, please, if you have any questions, please use the raise your hand option. There's quite a few on screen. So if you put your hand up, you'll pop up to the front of the line and we'll be able to get to you in the order that you raise your hand. With that, Alan, thanks for joining us. I'll turn it over to you and you can run with what you want to share with us.
Sounds good. Thank you so much, Darren. Let me load this up here. I'll give everybody a quick background about myself. I started in the business as a financial advisor about 19 years ago. And then 10 years ago, I was looking for different type of clientele, looking to grow my business. And my mortgage broker worked out of Remax Burnaby at the time. So he said, why don't we prospect realtors? And at the time, I knew nothing about real estate, but I had an advantage in that the franchisee at the time, John Lichenwald, had owned 8 Remaxes, and he also owned Remax Burnaby. So by getting into Remax Burnaby, by default, I got into all the Remax Crest, Remax Masters, Remax Central. Then I parlayed that into Remax Select, Remax West Coast, Remax Select on Main, Remax Pro Group, so forth, and then parlayed that into Sutton West Coast, and so forth. And so basically, I decided to focus all of my energies marketing and finding realtors as new clients. Even though I'm fully licensed in the province of BC and the province of Ontario, that was the clientele that I chose to focus on. Soon we got traction, and soon we decided that this was what we wanted to focus our energies on, was working with realtors and understanding everything about real estate in terms of the taxation, the expenses, and the incorporations. Then we started getting lots of inquiries about personal real estate corporation, and we would send that out to their own real lawyers or their own accountants. And unfortunately, even with the recipes that I gave them, it came back wrong. So then I decided to partner up with a small business accountant as well as a business lawyer to do everything in house. And that's where we are today, where people come to us and we do them from start to finish, start their incorporation, guide them as to how to properly use the PREC, and in some cases, how to fix the PREC. So we'll start off with this slide here, and I'll ask everybody just to ask all your questions at the end. That way I can kind of keep a flow going. The way that you're accustomed to now is that the brokerage pays you a commission. There's no middleman. Then you file your taxes and you pay your taxes. The PREC is essentially your middleman. The brokerage pays the personal real estate corp, and the brokerage pays licensed team members, and the PREC pays a dividend or a salary to the realtor. That's the second most common question we get. First one is, when should we become a PREC? Second one is, should I pay myself dividends or should I pay myself a salary? There's a funny rule with BCFSA, formerly Real Estate Council, and those rules are different than the rules set forth by Revenue Canada. Revenue Canada does not care if you're a dentist, doctor, lawyer, and you use your operating company, which the retail name for in the real estate world is Personal Real Estate Corp, but the Revenue Canada name is operating company. BCFSA's rule states that the PREC can only be used for real estate trading, buying and selling, or property management, which means the money that's inside the PREC after your expenses, your corporate tax, it's stuck there. You can't get it out unless you pay yourself a dividend or salary. So when you ask an accountant, do I need a holding company? Almost 60% of the cases, they'll say no, because they're giving you advice based on Revenue Canada without actually knowing what the BCFSA rule is. So based on BCFSA rules, you need a holdco. Anybody in the room who is a team leader and they're paying their licensed team members from the PREC, that's actually not allowed. And this is another obscure rule that nobody knows about. Only one licensee can be paid from the Personal Real Estate Corp. I would say 99% of the time, BCFSA will never find out that you paid your licensed team members from your PREC. But in that 1% odd chance that you did something wrong, you double-ended, you have illegal advertising, BCFSA comes there and they open up all your books, ask to see all your files, Google everything about you, and then they ask to see the books from the brokerage, and it shows that you've been paying your licensed team members from your personal real estate corp, that's an additional fine. So note to self, note to the team leaders that if you actually have team members you're currently paying from the PREC bank account, you need to stop that practice and you need to direct the brokerage to pay your licensed team members. This is what we talked about. The name for your PREC is actually operating company when it comes to Revenue Canada lingo. The operating company for Revenue Canada is allowable to use personal and business. You just have to have a clear separation. But for real estate council rules, that's not the case. Retained earnings can then be flowed to your holdco. So that's why you need a holdco, is so the money is not stuck inside your personal real estate corp. The holdco is what you would use personally. That's what you use for your investment properties, your pre-sales, life insurance, stocks, bonds, mutual funds. So a lot of people are thinking now, oh my God, I need a holdco. And then they still do the structure wrong. So let's go through the proper structure before we get into another incorrect structure. This is the correct structure where the realtor owns a holdco and the holdco owns the PREC, and the realtor also owns shares of the PREC. So the realtor has their personal bank account, personal credit card, personal debit card. The holdco has their bank account, the holdco physical checks, and any money that you move from the PREC to the holdco is called a tax-free flow through. So there's actually no taxes paid. Only if you use the money in your holdco to buy a pre-sale for say 500,000 and you sell the pre-sale for 600,000, that's when you incur a taxable event. Just moving money back and forth from the PREC to the holdco does not incur any taxation. Then at the bottom level is going to be your PREC. This is your PREC bank account, your PREC credit card, your PREC debit card, your PREC checks. Why you need these 4 items is because you need to flow money. So having the bank account allows you to receive money from Remax Generation into the brokerage, from the brokerage into your PREC bank account. Then you take your client out for a meal, that's charged to the credit card. Maybe that place doesn't take credit cards and you use your debit card. Then how do you flow money from the PREC to the holdco? You would think you can do an e-transfer, but e-transfer limits are usually 2,000. So if you have a large commission check, you can't flow money from your PREC to your holdco. So you physically have to write a check from John Smith PREC to John Smith holdco, and then deposit that check in the holdco account. Then if you're going to buy a pre-sale, on title would be John Smith holdco. That's going to write that check or that deposit into there. Then we're thinking fast forward a bit. So let's pretend Darren today is 65 years old. He's going to hang it up. If he's going to hang up his license and retire, this structure with the PREC on the bottom means that Darren can file a final tax return and all of his properties, all the life insurance, all his stocks in the holdco remain intact and there's no deemed disposition. The PREC has no value. He's 65 years old. Here's my license, walk away from real estate, you just give up the PREC. This is 50% of the realtors because of what we mentioned earlier. Their accountant was following Revenue Canada rules. When they asked their accountant, do I need a holding company? Their accountant said no. So they said, okay, we're not going to do it. Then they come see us and we tell them, okay, you have all this money stuck inside your PREC. How can you use it? You're going to need a holdco. Some people will jump the gun and then they'll add a holdco. And again, they do it wrong for the second time because the holdco is still beneath the PREC. Imagine same scenario, Darren's 65 years old now, his investment properties, his stocks, his life insurance is all in the holdco, but he's just surrendered his license to BCFSA. He wants to get rid of the holdco, but he can't because, or sorry, he wants to get rid of the PREC, he can't because the PREC owns the holdco, and if he gets rid of the PREC, he has a deemed disposition of all the assets inside the holdco. So then he has to sell the assets of the holdco to the realtor, and there's a deemed disposition before he can get rid of his personal real estate corp. The worst structure I've ever seen, and I've only seen it once in 10 years, is where it's a triangle. The realtor is in the top, and on the left side, the realtor owns the PREC individually, and on the right side, the realtor owns the holdco individually. This is an absolute nightmare. No money can be moved between any of the corporations. It becomes shareholder loans. Hopefully nobody in the office has that structure, and that would be the absolute worst structure that realtor can possibly have is a triangle. So now you're asking yourself, what do I do now if I don't have a holding company? Financially, it's going to be more expensive for you to start up a new holdco and restructure, reorganize, transfer the shares, and sell your PREC to your holdco. You're probably running, depending on your existing structure, around 4 to 5,000 to start the new holdco and then sell or transfer the PREC to the holdco to get back to this ideal structure here. It's kind of like cancer. The longer you leave it not having a holdco, the bigger and bigger your PREC becomes, the more retained earnings you have in your PREC. You don't want to pay yourself because then you move up to the next tax bracket. So essentially, all this money is stuck. I've seen up to $1 million inside of the PREC, and the realtor does nothing with it because they can't invest it. They don't want to pull it out. It's just stuck there. And then we have to come in. And now the problem gets bigger because if the PREC had no money in there or small amounts of money, then the goodwill value of the PREC can be deemed as, say, $100 or lower. But when it's in the millions, then it could be a huge goodwill factor. And then now you're at a triple whammy. You have to restructure, reorganize, and pay taxes. The next thing we have to understand is the two definitions of income as per Revenue Canada. The first definition is earned income. This is a salary or commission that a person receives individually. Two of the items that are available to you when you earn earned income is that you can contribute 18% into your RSP for 30 grand for that year if you've maxed out your income and you want to max out your RSP. This is the thing that people don't know about is the Canada Pension Plan has two parts. One is employer and one is employee. So if you're an employee, the employer pays half of the 7,509 and then the employer pays the other half. But if you're a realtor, you pay both halves. And the reason I recommend to all realtors who are personal real estate corp to take a dividend income is because dividend income allows you to opt out of the Canada Pension Plan. Because by default, when you take 100% dividend income, you no longer generate RRSP room, you're not going to contribute to your RRSP, and you don't qualify for the Canada Pension Plan. It doesn't mean you lose all the pension plan from before. It just means from the point that you become incorporated, that point moving forward, you no longer contribute. The reason I advise realtors not to contribute to Canada Pension Plan is because the amount is so low and the Canada Pension Plan rate of return target is around 4.4%. And if you're a single individual and you pass away, you forfeit all of the Canada Pension Plan. So Trudeau keeps every single dollar from when you were 15 years old and you started working till today, you forfeit all of it. If you're married under 65 and you pass away, then your surviving spouse only receives 37.5%. Over the age of 60, if you pass away, your surviving spouse gets 60%. So in every situation, whether you live, whether you pass away, God forbid both spouses pass away and you forfeit both Canada pension plans, it doesn't really work out. Instead, you take that cash flow of 7,509 and you can put it into your tax-free savings account, or you can redirect that to paying your new additional fees by becoming a personal real estate corp. Either way, you can opt out of the Canada pension plan and be in charge of your own hard-earned dollars rather than give it to the government and have them have a target return of 4.4%. The other thing that we have to take into consideration are mortgages. Traditionally, a branch bank individual that you go to see who was wanting to lend you money, they lend based on a criteria of 4.5 times earned income. Okay. So if you're earning 100,000 in earned income, they can lend you 450,000. But earned income does not equal dividend income. Okay. Dividend income on paper, you are actually zero. Dividend income does not equal earned income. So when you go into branch level and you see somebody and you say, oh, I made $100,000 in dividends, to them, you make zero. The calculation they're going to make for you is 100,000 times zero. So they're going to be able to lend you at the branch level zero. So then you have to go to the next level, which would be RBC Mobile Mortgage or CIBC Mobile Mortgage or TD Mobile Mortgage to get more specialized lending. Somebody who can look into a deep dive into your income and say, oh, John Smith made zero earned income, but John Smith's corporation made 300,000 and John Smith paid himself $100,000 dividend. So the myth that's out there is I don't want to become a PREC because I can't get a mortgage or it's impossible to get a mortgage. No, the correct verbiage should be it's more difficult to get a mortgage and have access to a smaller group of lenders, but the mortgage is still available to you at a normal rate and from lenders in Canada. You just need to see the right person. Now, the Canada Pension Plan, we have to understand what's going on here. The Canada Pension Plan, essentially, in a nutshell, a Canadian works 40 years in Canada for somebody. The employer pays some of the Canada Pension Plan, the employee pays some, and then they retire. As of today, you're probably getting about $1,300 a month, and it's indexed to inflation. In 2019, Trudeau and Morneau came up with some crazy idea that said, based on the census, 60% of Canadians were not saving for their retirement. And they said, okay, so Canadians are not voluntarily saving. We're going to force you to save, and we're going to up that rate of the Canada Pension Plan at whatever we feel like. We're not going to base it on inflation anymore. Unfortunately, that really, really hurts self-employed individual because there was a cap. So last year, the cap was 64.9. What that meant is any realtor who earned 64,900 net was subject to a Canada Pension Plan premium of 11.4%. That's 6,999. The cap means doesn't matter if the realtor makes 70,000 net, 100,000 net, 1 million net. This is the maximum they're going to pay. 2023, that cap went up to 66,600 net. So when people ask me, when should a realtor become a personal real estate corp? That number is 66,600 net. I don't know what happened 10 years ago when one realtor told another realtor, and they said, oh, you got to make 150 grand, 200 grand, 300 grand to become a personal real estate corp. When a realtor comes to me and says, my managing broker, my colleague, or whatever told me that I have to make this number, I simply say, great. I'm not sure if your managing broker is right or wrong, but I know my math is correct. So please ask your managing broker to show me the math. Or please ask your colleague to show me the math that says you should transition to personal real estate corp when you make 150 or 200 grand. To this day, no managing broker, no realtors ever shown me math to prove that my math is incorrect, because math is absolute and the math set forth by Revenue Canada is also absolute. There's no if, buts, or ands. This is the CPP maximum, and if you are in that maximum, you don't have to pay the Canada Pension Plan. And this is the major savings for realtors by becoming incorporated, is not paying the Canada Pension Plan. Next year becomes even more complicated. We'll super simplify that for you guys and just say that if you earn 72,400 net next year, you're going to owe 8,000 into the Canada Pension Plan. By being a personal real estate corp today, next year you avoid paying that $8,000. So that is a huge, huge savings. Over the course of 10 years, that's 80 grand that you paid into the Canada Pension Plan. And if that realtor passes away, you forfeit all of it. So why would you pay into something that you may or may not get back in that small risk factor or large risk factor, depending on your age? Instead, everything inside your holding company, if you pass away, your spouse or your kids are going to inherit that money, versus your kids will never, ever inherit any unused Canada Pension Plan. And that's just the rules from them. The corporate tax, this is the middleman we talked about. Remax Generation pays a $100,000 commission into the PREC. The corporate tax is 11%. Anything over 500,000, that $1 over is taxed at 27%. That means your holdco's cash flow is $89,000. Personal taxes, where you're not a PREC, we're in a laddered tax system. So that 100,000, the first 45 is taxed at 20, 45 to 53 is 22.7, 53 to 91, 28, 91 to 104 is 31. So the same 100,000, you're netting 78,553, but you have to pay the Canada Pension Plan, 7509, so you net 71,044. 89,000, 71,044. CATSR wise, you're already up on that. God forbid you make more money personally. 200 and let's scroll all the way down here. Imagine that same example was 240. That's 53.5, right? So you'd have 46.5 left versus the corporate tax of 11%, $89 left. Benefits of PREC, personal taxes paid at a dividend rate. Even with something that your accountant may have told you before, it's called tax integration, where there's still a small differential between personal taxes and dividend tax rate. That small differential, we'll call it about 1.6%, magnifies over time, right? That 1.6% of 100,000, 200,000, 300,000 plus not paying the Canada Pension Plan, that's going to equal close to say 10 grand a year for a realtor who earns 200K. You defer taxes for the future. Imagine if you had a $500,000 commission this year and you had to pay 53.5% tax. If that same 500,000 goes into your PREC, you pay 11% tax, 55,000, and then you have 445,000 left. You can slowly bleed that out of your PREC, right? Because you're now controlling the tap, how much money you pay, versus if you're not a PREC, every dollar that you receive gets taxed right away in that tax year. Opt out of the Canada Pension Plan, control your income, pay yourself, more cash flow. The negatives now. You need a second license. So the second license is for your PREC. It's $850 a year. If you get fined, the realtor is fined and the PREC is fined concurrently. If you get suspended, the realtor is suspended and the PREC is suspended. Double E&O and triple accounting fees. The realtor has to pay personal accounting, the PREC small business accounting, the holdco small business accounting, and a one-time fee to the lawyer initially to incorporate the PREC and the holdco, and it becomes more difficult to borrow, right? Dividend income does not equal earned income. And if you've done RSPs before, I would actually suggest that realtors don't do RSPs once they're incorporated, because when you get that RSP out, you start paying taxes on the entire amount. But if you get money out of your holding company, you pay capital gains or you pay dividends. So I would say 95% of my realtors who've become a PREC no longer have RSPs, or they stop doing RSPs because I showed them the math and it just says it's not going to work out for you. Being a incorporated individual is a very rare occurrence. I would say 5% of Canadians are incorporated individuals. All the doctors, dentists, lawyers, accountants, and now realtors. So this is not something that a general accountant would understand. It would be a small business accountant that would be understanding of, oh, okay, this is what you guys are. This is what we're going to do to help you. And this is the difference. So now let's take a look at the math. My advice to realtors is if the math makes sense and I'll calculate the math for you, then you should transition to personal real estate corp. If the math doesn't make sense, you shouldn't. It's that clear cut. There's no ambiguity. There's nothing. It's strictly math. Okay. So the council fees, $850. Your small business accountant, $324. The lawyer to incorporate, $1,000. The holdco, $1,000. And BC Registry charges $350 to incorporate and register the company. And the company name costs $30. So $350 plus $350 is $700. $30 for John Smith Personal Real Estate Corp. $30 for John Smith Holdings. $760. You add the GST. Your startup costs for year one, $4,103. Right. So you're not paying this $7,509. If I subtract $7,509 from $4,103, that's how I get $3,406. So you will net $3,400 positive if you make $66,600 net. So if this John Smith realtor said to me, Alan, should I become a personal real estate corp? I would say 100% you should become a personal real estate corp. Second year math, you're still paying your council fees of $850. There's no startup costs. You're already incorporated. Here's the sticker shock, is that personal real estate corporate accounting is a lot more expensive. There's more transactions involved. There's just more things to do. The analogy I'll use, and I'm always full of analogies, is your family doctor charges MSP $38 for your 15-minute visit to the family doctor. Okay. Same with a general accountant. They're generally billing at $100 to $200 per hour. Our small business accountant bills at $324 per hour. Your cardiologist, neurologist, they're probably billing at $800 to $1,000 an hour to MSP. People, another question they'll ask is, why should I use a small business accountant? Or why should we use a general accountant? Well, technically, cardiologists and neurologists are all family doctors. They did the 8 years of med school and then they did another 8 years. So when you're pregnant, do you go see the foot doctor? When you need heart surgery, do you see the gynecologist? You have to match the professional with your circumstance. People don't know that there's a general accountant, there is a corporate accountant, small business accountant, audit accountant. So it depends on your situation. You have to match it up. Unfortunately, every professional has a different price per hour or a flat rate, and the small business accountant charges more. The corporate accountants charge even more, and the lowest level of accounting would be a bookkeeper. Bookkeepers, I'd say 80 bucks an hour, maybe less, maybe slightly more. So that's the differential between using your own general accountant or using our small business accountant or finding your own small business accountant. So in the second year, based on what the Revenue Canada has said the Canada Premium Pension Plan premiums will be, that's what it's going to be. That's what your second year cost would be, and you're still up 24.82. So even in the second year, it makes sense. Where there's some gray area where people are wondering, worst case scenario for me, would the PREC not make sense? How would I lose money? You would lose money if you made, say, 40,000, right? 40,000, you're only saving maybe 2 grand, 3 grand in terms of the Canada Pension Plan. So in that situation, you would be not better off becoming a PREC. But that is an issue in itself because you can't pay your mortgage, you can't pay your bills if you're making 40 grand net. So generally speaking, I've only had one failed PREC, and we have hundreds of PRECs. I'd say about 300 PRECs. We've had one failed PREC. That's it. So the odds of that failing for you when you've become a PREC and just saying, hey, this is not for me, I'm going to get rid of all of this, I'd say it's a very, very, very rare occurrence. Okay. So we already went through this. This is just your progressive tax system. Someone might ask me, what is the most ideal amount that the PREC should pay a realtor? I would say just pay yourself the sweet spot. This is published on taxtips.ca every year. So the sweet spot this year is 45,654. You can see if you took a salary or commission, that's your tax. If you slide over here, this is what you would pay for your dividends. So if you paid yourself 45 grand in salary, pay that tax. Dividends, you're paying that amount. So ideal income, 2023, 66,600 net, keyword, 72,400 net for next year. And let's give two extreme examples that fall outside the norm. Realtor husband, 40,000 net. Salary wife, 300,000. We can do the math on that. You'll probably break even as a PREC, but any dollar you make over the 40,000, you'll come out ahead. So the salaried wife or the salaried husband has no choice. They have to take the 300,000. But the husband or wife that is a realtor has a choice of hiding and deferring all their income inside the PREC, not paying any personal taxes for the year, and just live off the spouse's salary. Realtor earns 500,000 gross. Their net is $1. It probably doesn't make sense for this realtor to become a personal real estate corp. There's no deferral aspect. There's very little in terms of tax savings. You can't even use the differential between dividends and earned income in order to generate additional benefit. Okay. So the next issue we have is another very obscure rule. Nobody knows about this rule. Nobody reads about this rule. We see it all the time. I'm going to point out, I just did a general Google search and I found some infractions within your brokerage. This is not meant in any way to throw anybody under the bus or embarrass you. I'm just trying to get you saved from a $2,000 fine from BCFSA. And people don't know this rule. Darren, can I get you to read the second paragraph, please?
Sure. When licensing a personal real estate corporation, make sure that the legal name of the personal real estate corporation is the name in which you advertise. Using the term PREC or PREC is not permitted. You must use the entire personal real estate corporation term. We actually talked about that a little bit a few weeks back. We had an issue and a note from BCFSA regarding one of our realtors. Somebody had filed a complaint or made a complaint about an advertisement that was put out that used the PREC acronym.
And was that realtor fined?
No, no.
Okay. So they got a free get out of jail free card. The
Yeah,
second time they do that or they do a deep dive, that's I don't think they're going to get that same get out of jail free card. This I all these complaints I would say in my non-professional opinion are internal. The general public has no idea about this rule. This is another realtor who doesn't like another realtor or is jealous or managing
yeah.
broker who sees this and feels it's their obligation or duty to report it. I would say almost all instances of this are from internal complaints. I don't agree with the rule, but it is a rule. And so my job is just simply to let you guys know about this rule and avoid this rule. There is one exception. MLS is actually very old software. Their software cannot accept the amount of characters to say John Smith Personal Real Estate Corp. So MLS by default will use PREC star. So that is allowable. And because rew.ca pulls the info from MLS, all the REW says John Smith PREC. So that's the only exception of the rule. If you do another deep dive into the rule, it says any licensee generated advertising with the illegal use of PREC star or P.R.E.C. or whatever, just PREC, all of those are not allowable. So technically, because MLS is not licensee generated, that is why that's an exception. Okay. So the further rules tell you basically Susan Wong star denotes personal real estate corp, all those not allowable. The most common objection or from realtors is, oh, that guy did it. Oh, that guy did it. Or I saw this other ad of another realtor who did it. This guy did that or she did that. It doesn't matter what other people do. It only matters what you do because when BCFSA comes, they're not going to find that other guy or that other gal. They're going to find you. So as long as you understand the rules and you advertise all your social media, everything according to this manner, then you're going to be protected. There's also another rule that says they have the option, BSFSA, of finding the brokerage for your infraction as well. So not only are they going to find you, they could find the brokerage as well. Okay. So again, back to the slide number 2, I think it was, only one licensee can be paid from the PREC. Unlicensed support staff can be paid from the PREC. Licensed team members, that must be paid by the brokerage. All advertising must have John Smith Personal Real Estate Corp, not John Smith PREC Star, not P.E.C, not PREC. Double fines for you, concurrent suspension. The PREC can only be used for real estate trading or property management. The realtor owns voting shares of the PREC and holdco. The spouse may own non-voting shares. Another quick example of a allowable advertising, Robbie Vendra, Personal Real Estate Corp. And then we have to understand the administrative penalties. This is considered no harm to a consumer. So that would be 1,000 for the first contravention, 2,000 for subsequent. Remember, if you're a PREC, you're two entities. $1,000 fine to yourself, the realtor, 1,000 to the PREC. I'm not sure if people are familiar with this page. Anytime a licensed realtor, mortgage broker commits an infraction and they go to tribunal and the tribunal determines that they are guilty, you get posted on this page. So hopefully we don't want any of the realtors here in this brokerage to end up on this page, right? But if you do, anytime your buyer seller is considering hiring you, they might Google you. And if they Google you, what's going to pop up is your legal name with the BCFSA decision. So we find that this is what most buyers and sellers do before they hire a realtor. They do a deep dive and they Google, they ask for testimonials, and they try to find out whatever they can from the realtor via social media or via the regulator. I know for my clients, when somebody's interviewing me to become their new financial advisor, I voluntarily give them the links to my governing bodies so that they can verify that I'm licensed without any suspensions, without any infractions. I'm actually licensed in good order, right? So you can trust that a lot of consumers out there will do the same for realtors as well. Then there was a change a few years ago when the rollover from Real Estate Council became BCFSA, and that was something known as the publication period. It used to be a 2-year publication period. Now it's anywhere from 5 to 10 years. So for an infraction, simply putting PREC onto your business card or onto your Instagram, whatnot, and you end up on that website for 2, 3, 4, 5, 10 years, that's just not worth it. And there's no way to get out of it. Okay. So that's another issue to be wary of, is the publication period. Now let's look on to some actual examples that I found at each brokerage. Just before I do a presentation, I just pick realtors at random, I Google them, and if I find something, I put that on there. And again, not trying to throw anybody under the bus, just trying to save you guys from a fine. Danny Ching, PREC star. Danny Ching, PREC star. This is his Instagram. That's $2,000. That's $2,000. This is Ali Earl, PREC. That's $2,000. This one is a little bit tougher. We're looking at Sean McClintock, and we're looking at, he doesn't have PREC, he doesn't have PREC star. This is known as failure to identify as Personal Real Estate Corp. So all he has to do is add Personal Real Estate Corp here. Maybe he can get rid of this line, Real Estate Group Vancouver Island, and just throw in Personal Real Estate Corp. So failure to identify, and this one is using the acronym PREC. Travis Briggs, you can see here, PREC star. Travis, you're welcome. Saved you $2,000 here. So just have to change that there. And actually, he has to add the address of his brokerage. Here, PREC star. Here is PREC star again. Here is PREC star again. PREC star. 2,000, 2,000, 2,000, 2,000. $8,000 in fines right here. This is not just with you guys. This was a top realtor in West Vancouver, $1 million producer, PREC star, on his website, on his mobile website, PREC star, 2,000 and 2,000. 2,000 right here, 2,000. This was probably the worst I've ever seen. PREC star, PREC star. This is actually a billboard on the on the north end of the Arthur Lang Bridge in Greater Vancouver. So when you leave the airport and you enter Vancouver, on the northwest corner, there's a billboard, and you're going to see this billboard there. There's another rule. The rule says that even though you're a personal real estate corporation, if you have licensed and registered your team name, you do not have to identify yourself as a personal real estate corp. So here, Keith Roy, Remax Select, his team name is Keith Roy and Associates, and you can see his PREC name is Keith Roy Personal Real Estate Corp. And you can see on his website, he does not identify as a personal real estate corp. He simply identifies as his team name. So all you have to do is you tell BCFSA to register your team name. I believe it's $50, and that's a allowable name for you to use. If hypothetically this person did not register Keith Roy and Associates and he was using Keith Roy and Associates name, that would be non-compliant advertising. Those wondering, your Instagram, what is allowable? This is a compliant advertising. The personal real estate corp, the brokerage name, as well as the brokerage address. So those are the three components: your name, personal real estate corp, brokerage, and brokerage address. So that would be considered compliant advertising. Okay. All right. I am very social media savvy. So if you guys are on Instagram, that is my Instagram. 3 years. I started this during COVID, March 2020, grew that to 2,000 followers. I would say 30% of my business comes from social media. Those who follow me already on my Facebook, you will see something I do every week called Friday Parking Failures. And as that was just purely me showing my frustrations of bad parking. And when I posted my financial insights on my Instagram stories, Facebook stories, I got maybe 100 views. Then one day I posted bad parking and I got 1,000 views. I was like, whoa. So then I started posting Friday parking failures every single Friday. And then I would throw into there a financial post. Then I got 1,000 views. And then I get people asking me about PRECing, people asking me about stocks or life insurance. So essentially, if you're wondering what a financial advisor like myself does, I do everything except mortgages. So if you currently have RSPs, you're not happy with your financial advisor, you have TFSAs, you have investments, you're not happy, you want a second opinion, or if you just got married, you're expecting a kid, you just got a mortgage, you don't have life insurance, that's something that our team can help you with. So on my team would be my small business accountant as well as our business lawyer. So when a realtor comes to me and they want to become personal real estate corp, I'm the person who is the initial level who does the math for you. Those are the two individuals who are going to do your taxes, your accounting, your bookkeeping, as well as your incorporation. And I will preface in that accountants do not pay out referral fees, lawyers don't pay out referral fees. I do not pay out referral fees. Therefore, if I give you advice, my advice is 100% unbiased because I'm giving you advice. I'm not getting any remuneration for it. So there's no commissions, there's no referral fees. I'm truly out there to help you. People ask me, why do you do this? It's the only way that I can put myself in front of realtors. Why do you do open houses? Nobody gets paid for open houses. All these consults I do for helping realtors, there's no money paid. But when that realtor decides they want life insurance, they want to buy investments, or they have a client who just bought a place, $1 million mortgage, no life insurance, I get that referral. So eventually I'm going to get paid. So thank you everybody for your time today. Please add me to Instagram or follow me to Facebook. Thank you to Alex Burns for introducing me to the brokerage. Thank you to Darren, and I will take all your questions.
Very nice. Thanks, Alan. There was a couple of questions, I think, in the chat. I saw pop up. One of them, I think, was, will this slide deck be available for us to distribute amongst the brokerage? Can you make that available
No,
to us?
I will. This is what I say to people. If Gordon Ramsay gave you his cookbook, you're not going to replicate it. If I give this to you without me actually going through it, you won't get it. So if you want this slide deck, you can book a Zoom meeting with me. I'll go through the slide deck with you and we can answer all of your questions as it pertains to your individual math.
Perfect.
Yes. Next question.
Let's see. There's a question from, oh, hang on a second. There's a handful of messages here. Let's see. Best explanation, where can you use PREC in your marketing, MLS? I think we covered that. Can a holdco own property assets outside of British Columbia or Canada?
I would say only in Canada. Yeah.
I think that's it. Pardon me if I've missed something in the chat. I'm a little bit laggy on my end. Does anybody have any questions? Raise your hand or feel free to speak up. I'm not seeing any.
So I'll ask
I've got a
Darren.
question actually.
Okay, Alex, go ahead.
Hey, Alan. Thanks, man. That was a great presentation. Awesome job. I think you went over it pretty quickly, and I didn't totally catch it, but you were kind of differentiating between the team name and the PREC name. And so, were you saying that the team name would allow you to not have to reference the personal real estate corporation? I kind of heard
Correct.
that in
That's
a
correct.
different way.
Yes. As long as the
Okay.
team name is registered with BCFSA.
Okay. My understanding is for Sean McClintock, he has a team name registered, and that's why he doesn't have that on his profile.
Then he should put his team name on his profile.
It was
That's
on there.
what's on his profile right now.
Was
yeah.
it? Okay. Yeah. Maybe I skipped that
So
one.
your infraction has now been removed, Sean. You're welcome. But I do see everywhere PREC on advertising all over the place. I think, or I guess the question is, how big does personal real estate corporation have to be? Because some people put it on like the tiniest little line.
That's fine.
Yeah.
They're more looking at using PREC star p.r.e.c. They're not looking at the size of the font. Okay.
Okay.
If you go into the CREA has another set of rules. If you look at the CREA rules say that the brokerage name must be prominent. Okay. So there's a case, if you look at it, it's if all the fonts on your bus bench and the Remax generation is the smallest font, that can be a violation. So their prominent means that the font cannot be the smallest, right? So they don't have that type of wording for PREC. Doesn't say prominent. So technically, that tiny personal real estate corporation, that is allowable. But any size of PREC star, PREC, or P.R.E.C is not allowable. And again, it goes back to, I don't know who started that. They say, oh no, that guy did it. Oh, I can do it. That guy didn't get fined. Oh, that guy didn't do it. And then everybody started doing it. Or monkey see, monkey do, right? Oh, that guy put
That's it.
PREC star. Some person did PREC star and then put on the bottom denotes personal real estate corp. I don't even know where that one came from, right? There's no, all you had to do was go to the BCFSA / personal real estate corp. You can read everything that I've screenshotted to you today. Nobody has read it. So that's the
Yeah.
value I bring. People ask me, why do we use Alan as our financial advisor? Because I know both sets of rules, right? And if you were my client right now, and today I called you out, I just saved you $2,000, right? So
Yeah,
are you going to
exactly.
fire your financial advisor and move to me now, right? What are we going to do here?
Well, it's such a specialty, right? You're doing such a specialty, and I don't think anybody
There is
knows as
nobody
much as you do about it. Yeah.
in the entire Lower Mainland to put into scope for you guys. My team is the only team that focuses working on realtors, helping them incorporate and dealing with their
Yeah.
personal finance. There's no other team that does this. It's good in that
That's
I have a
awesome.
specialty, but at the same time, I pigeonholed myself. I'm stuck with you guys for the rest of my life, right? 95% of my clients are
Lucky
realtors.
you. Lucky you.
So
That's great.
there's that
Okay,
one
cool. Any
there.
other questions?
Uh,
I got one quick question, if that's okay.
Sure, go ahead.
So if we go to you to do this, do you take care of the incorporation and the lawyer, and do you set all that up, or do we do
Yep,
that
we do all that up for
separate?
you virtually. We do it all. Yeah, they
Yep.
will
Okay.
consult with you. They get it all done for you.
Yep.
One thing I forgot to mention is the time horizon. Okay, so
Yep.
it takes 5 to 7 business days to go through BC Registry, get you incorporated. Then your application to BCFSA, that's the bottleneck. It's 3 to 6 weeks. So the ideal time to get this done is the last week of October or the first week of November. Then you will be Personal Real Estate Corp legally and register with BCFSA by the second last week of December. Then you have your corporate bank accounts open. You have your void check. You give the void check to Remax Generation Conveyance. January 1st, 2024, all of your commissions go there. So it's not an overnight thing. So for people to understand, it's going to take a while to get it done. I would budget 3 to 6 weeks. And so that's why October, last week, and first week of November is the best time.
Great. Thank you. That's awesome.
Anybody else?
Okay, I had 2 questions for Darren. Darren, do you know when PREC was first allowable for realtors in British Columbia?
As a matter of fact, I do. It was 2009, and it was June 2009, I believe.
And how about for Ontario?
I believe that is very recent, October 2021.
Correct. So you guys have enjoyed an advantage for 14 years that realtors in Ontario have not. So if you guys know and meet at Remax Activate, realtors from Ontario, you can let them know that you've had this advantage and that you guys are taking advantage of it. These guys are making hundreds of thousands of millions personally. They've never had an opportunity to further tax or do anything. Okay. One more question for Darren. If a realtor has illegal PREC advertising from 2010, 2015, 2020, 2022, what would you suggest they do?
Make them go away. For as far as PREC advertising, PREC licensing, and historic advertising, anything that's available to the public out there right now, even if it is from 5 or 10 years ago, is still visible. And if it's non-compliant, it's non-compliant.
And would you rather your realtor pay $2,000 to BCFSA in fines, or the realtor take you out for steak, king crab, lobster, whiskey, and scotch?
Switch the scotch to bourbon and I'm all in.
So there you go. Like,
and it'll be cheaper.
it's hard to rack up a $2,000 bill, right? Very, very hard.
Depends on bourbon.
Yeah, okay, got you on that one. So that's essentially the presentation. I've given this presentation at almost every Remax office in the Lower Mainland. Again, my goal is to help all of you guys stay out of jail, help you guys grow your business. Any way that I can do that, more than happy to. I'm going to be at Remax Activate. CIBC is going to have their cocktail hour sometime after all the presenters and all that stuff. Come look tap me in the back or whatnot, and we can have quick chats. Anytime you want to reach out, my normal business hours are 11 a.m. to 7 p.m. And so anybody who wants to reach me, I'll take your call. Any concerns you have, more than welcome to email me as well. Anyone else here? Final call for questions.
Hey, Alan.
Yep.
We got a good turnout today. You know, for those that maybe are thinking that Activate's not going to be good for their business, what would you say to them being an outsider? You know, why should somebody go to Activate? Because you've been to a lot of conventions for Remax
Yes.
as a third party guest. What do you think
Okay.
the benefits to them would be for their business?
So I'll use my personal experience. There's no way I could have connected with Alex, and there's no way that I could be here today to speak to you guys unless I had met Alex at the Western Canada Mixer at the River Rock 5 years ago. Every year I wish Alex a happy birthday. I see him once a year at the River Rock. And then finally I reached out and said, I want to work with your brokerage. I want to do a presentation. And he remembered me and he's included me. If I were to become a realtor, the number one brand in the entire world is Remax. There is no such thing as Royal LePage or Sutton in Berlin, Germany, Sydney, Australia, Beijing, China. There's no such thing. So when you go somewhere else and you tell them you work at Oakwyn, you work at Sutton, they're going to look at you like, what's an Oakwyn? What's a Sutton? But when you say Remax, they're going to say, oh, you're a realtor. And so why would a realtor spend $800 plus gas plus ferry to go to the Activate convention? And mind you, the Activate, my understanding is it cycles. So it's going to go Victoria, Vancouver, Calgary, Edmonton, Regina, Winnipeg, Montreal City, Quebec City, Toronto, Ottawa, Halifax. It's not going to be back here for another 10 years or 9 years. So you have a ferry that you can just take for $100 and you can go to Activate. What happens at Activate is what determines if you're going to be profitable. So I'll give you an example. John Smith is from Toronto Remax something. And Alex meets that guy, connects, and tells him, hey, if you ever have somebody who's looking to retire, Victoria is one of the greatest retirement communities in Canada. If you've got that buyer who wants to relocate, I would love to be able to connect with you and get that referral. I can offer you 25% in terms of referral fee. And do you have Instagram? Are you on Facebook? Let me add you to that, right? Then that connection, if it comes through, let's say it's a 800,000 condo, 700,000 condo, you're making 13, 14 grand on the deal, and you spent $1,000 or $2,000 on Activate. Remember, I'm a math guy. That says I'm cash flow positive, right? Time wise as well, and money wise as well, right? So again, there might be somebody from Regina. Like when I go to realtor medallion dinners, I'm not there to eat. Everybody's like, how is the food? I'm like, I have no idea what the food is like. I didn't eat. I eat before. I'm going there to add Instagram followers, to add Facebook followers, to connect with realtors, to talk to realtors. If you go through my Facebook, you can see all of my Christmas parties. I go to every Remax Christmas party. I don't eat, right? You're there to eat. I'm not there to eat. I'm trying to get leads. This is lead gen, right? I tell my girlfriend, what are you doing tonight? Oh, I'm working. You're working? Yeah. You're working with 200 Remax agents? Yeah, they're my clients. If I can generate an income, that means I'm working. So all you're going to do in the room is look for people who are not in Victoria. If you're a Victoria realtor, okay, no, don't want to talk to you, right? Vancouver realtor, okay, we can talk. Calgary, we can talk. Just work the room, start getting those leads. Because why are you paying Remax? Remax has this referral program. It says you can talk to these other realtors, and when they relocate, they're going to contact you and you're going to get business. And then instead, they go to Activate and they just listen to the speakers and they don't do anything. Honestly, I would not listen to the speakers. I would be connecting in the room. I'd be buying drinks. I'd be talking to people, and we'd chalk up those drink fees or whatever is marketing fees. You can do a bus bench. You can do a bus ad. If I can buy a realtor in Toronto a beer for $10 and he gives me a lead that actually turns into a buyer, I'm making 10, 15, 20 grand. Is that not worth it? So that's what your goal should be, is to get those Instagram followers, get those Facebook followers, connect with those realtors, then generate a database and say, I met this person at Activate, and then connect with them a couple times a year and say, hey, Alex Burns here from Remax Victoria. Just wanted to say it's great meeting you at the convention. I realize the convention's Toronto next year. So looking forward to seeing you in Toronto. Love to connect, buy your beer, do this or do that. And this, just get that going, right? This is counter to what you might be going for, speakers. I'm just saying I don't go for speakers. I go to get lead gen. I go to meet people. It's
awesome.
very unintrusive, but that's what you're supposed to do is you're going to the convention to meet other people. They're coming there with the same mindset that if you have somebody that's moving to Toronto, they want that lead. So if you find these two people to connect, you have a synergy. So actually you're in competition with every other Remax realtor to get leads from each other and to make connections across country. So I would be like,
That's
if
awesome.
you're not scrambling, then I don't know what you're doing, right? You got to
Yeah,
scramble,
no,
got to
that's
hustle.
good.
Yeah.
And that's the
So,
ROA we're talking about, right?
yep, definitely.
Yeah, that's great. Okay, we're almost at 10 here, Darren. Any final thoughts?
I don't have any. I don't see any additional questions. I will say that no joke, Alan Pung. This was a great presentation, and really appreciate you taking the time to come join us.
Thank you so
Thank
much. Thank you,
you.
everybody.
Thank
That
you,
was
Alan.
awesome.
It's great.
Appreciate it.
We'll
Okay, Alan, we'll
see you
talk to you
guys all
soon.
at
See you at
Activate or
Activate.
see you on Instagram.
Thank you.
Thanks,
Ciao.
everybody.
care.
Appreciate your time.
Have a great day.